So the Fed did something right. On the other hand, what in God's name was the Fed and some of your other agencies thinking when you allowed banks to debank customers for reputational risk? Are you kidding me? Why did you allow that to happen?
Are you kidding me? That was the moment. Senator John Kennedy leaning forward, staring down the Federal Reserve's vice chair, demanding to know how banks were allowed to debank Americans over so-called reputational risk. Not interest rates, not inflation, access to the financial system itself. And that's where this hearing shifted from economics to power.
For that courtesy. Madam Vice Chair, credit should be given when it is due. I remember, 3 or 4 years ago, Chairman Powell and others were giving a report on the economy. Inflation was 9%. Was gutting the American people like a fish. Stevie Wonder could have seen it coming. President Biden asked, and Congress consented, I didn't, that we start spending money like it had the value of Louisiana ditch water. Had President Biden, had we discovered life on Mars when President Biden was president, he would have sent it money, medium. And I remember the Federal Reserve represented by Chairman Powell sitting here, and we're talking about what to do about it. And he explained his plans, and in so many words, I said, not going to work. I've read the white papers. You can get inflation down, but we're going to have to suffer unemployment of 7, 8, 9%. It didn't happen, did it? We had a soft landing. And the Federal Reserve was in part responsible, in the best sense of the word, for that. And we don't applaud that enough. And we can debate whether the chairman and the vice chairman and others should raise or lower interest rates, and what we should do about quantitative easing, and how many economists can dance on the head of the pin. But it's a fact. We had a soft landing. Thank God for it. Now, inflation is not down where we want, but 2.7% is a hell of a lot better than 9%, without having to suffer 7, 8, 9, 10% unemployment and the human misery that goes with it. Because you didn't like their politics, or you didn't like the products they made. I mean, do you think it would be fair? Senator Warren's not here, so I hesitate to talk about it. Senator Warren was a distinguished professor at Harvard University. Some people don't like Harvard. Some people don't like their politics. How could you possibly allow a bank to have the option? I'm not saying they did it, but to debank someone like Senator Warren, I'm using her as a hypothetical example, because you didn't like her politics. And you can say the same thing about gun manufacturers and oil and gas and anybody you don't like, and you let the banks do it. What in God's name were y'all thinking, Madam Vice Chair?
Well, Senator, I appreciate your concerns, and I share them. I was not the vice chair at the time
I know that.
Decisions were made.
But your institution went along with it. The banks proposed it, and your institution sucked it up like a Hoover Deluxe.
In my view, debanking is never an appropriate activity. It is, every American in this country should have access to financial services, and they should not be limited from access to those services based on their political, religious beliefs, or their engagement in a particular business that may be disfavored but is legally
Let me tell you, folks, this isn't over yet. Thank you, Mr. Chair.
At the start, Kennedy did something unexpected. He gave the Fed credit. He reminded everyone that inflation hit 9%. He said it was obvious massive spending would overheat the economy. He predicted the cure would mean brutal unemployment 7, 8, even 9%. That didn't happen. Instead, inflation fell to 2.7% without mass job losses. A soft landing. Rare. Historically difficult. The Fed avoided what economists call demand destruction. Kennedy acknowledged that. That's important. Because this wasn't a partisan attack from the jump. It was a pivot. Praise then pressure. And the pressure point was this. If the Federal Reserve can stabilize the economy responsibly, how did it allow banks to cut off customers over political or reputational concerns? That's where things get serious. Under Article 1 of the Constitution, Congress regulates commerce. Under Article 2, the executive branch enforces laws. The Federal Reserve, though independent, operates under congressional authority. But nowhere in that structure is there permission to quietly exclude lawful businesses from financial access because they're politically controversial. Kennedy's argument wasn't about monetary policy. It was about equal access. He framed it bluntly. Should a bank be able to deny services to someone because of their politics? Because they manufacture firearms? Because they're in oil and gas? He even used Senator Elizabeth Warren as a hypothetical example, flipping the politics to show the principle. That's strategic. The Fifth Amendment guarantees due process. If the government pressures private banks to restrict access without clear legal violations, you're entering a gray zone. It's not criminal prosecution. It's not regulation passed by Congress. It's something more subtle. Regulatory influence. The vice chair responded carefully. She said she shares the concern. She wasn't in leadership at the time. She said debanking based on political or religious belief is inappropriate, measured, controlled. But Kennedy wasn't satisfied. Because his core implication wasn't that banks acted alone. It was that regulators allowed or encouraged an environment where reputational risk became a justification for exclusion. Now, here's the neutral reality. Banks are private entities. They assess risk constantly. Reputational risk is real in a market economy. But when federal regulators supervise those banks, guidance can become pressure. And pressure can look like policy even if Congress never voted on it. That's the tension. On one side, financial institutions trying to manage risk and public backlash. On the other, the principle that lawful businesses and individuals shouldn't lose access to banking based on ideology. This isn't about liking gun manufacturers, or oil companies, or progressive academics. It's about whether access to the financial system has become a soft tool of political sorting. Kennedy ended with, "This isn't over." That wasn't theatrics. That was oversight signaling. And here's the analytical takeaway. The most powerful institutions in America aren't always the loudest ones. When regulatory guidance shapes private behavior, constitutional accountability becomes harder to trace, harder to challenge, harder to see. Inflation can be measured in percentages, but access to the financial system? That's measured in power. And power, once quietly expanded, rarely shrinks on its own.